Before embarking on a brand new investment journey in the new year, hear out Ravi Dharamshi's sectoral calls. Listen into an excerpt of our chat with him as he details the rationale behind the China+1 strategy and what it entails for India when it comes to the manufacturing story.
There are certain opportunities, especially in the pockets like IPOs and certain segments like a downstream capex is where a lot of the opportunity is now flowing through. The manufacturing theme in India is here to stay. Whether it will be next 10, 15, 20 years, I believe manufacturing in India is on the rise. And there are confluence of factors driving that. Number one is China is facing a slowdown. And China is trying to move away from being, the manufacturing or the factory of the world to becoming a more inwardly focused, more domestic consumption focused economy. Second, world has realized that it is too dependent on China in some of the sectors and some of the strategic sectors as well. So they need to reduce their dependence. Nobody for a moment is suggesting that China is going to be replaced. But if China is 40% market share in a particular commodity, that might come down to 35% over a period of time. Or if it is 90-95%, as in the case of solar renewables, that will also come down. They cannot remain so dominant in a particular sector because the importance of that has now been impressed upon the major economies in the world due to what happened during COVID times. And third is, of course, India needs to, replace its agriculture as the main agri and rural economy as the main source of employment for people and move them towards, urbanization, infrastructure, related employment and manufacturing related employment.